past presidents of the society, and my office bearers. I welcome all of you to this panel discussion on Budget 2021, a 360-degree view of Indian economy by the eminent panelists. I welcome the panelists Dr. Ajit Ranade, CA Bhagirath Merchant, CA Niranjan Hiranandani, and moderator CA Vikas Khemani, and thank you them for accepting our invitation to speak on the BCAS virtual platform. I also thank past presidents of the society, Mr. Ashok Dhere and Naushad Panjwani, and managing committee member Mr. Kinjal Shah, who helped us in our endeavor to get these faculties on board. BCAS is a voluntary body of chartered accountants with 72 years of presence and imparting around 350,000 plus hours of education annually to the members, professionals, and people at large. Last 1 year, BCAS adapted itself to digital transformation and the virtual realities. In our last AGM on the founding day, CA Deepak Parekh, Chairman HDFC, was a chief guest. He complimented BCAS for being adaptable and remaining relevant for 72 long years, which is an achievement for a voluntary body like this. Mr. Deepak Parekh, a chartered accountant who created HDFC brand. Today also we have 3 chartered accountant faculties and 1 IITian, and all of them created their own expertise and specialization. For example, Mr. Hiranandani created his brand in real estate and other businesses. CA Bhagirath Merchant is a born merchant and investment banker and ex-president of Bombay Stock Exchange. And CA Vikas Khemani created a niche in investment and research. Dr. Ranade created his space in economics and heading economic wing of one of the largest Indian multinational group, Aditya Birla Group. One of the advantages of virtual reality is we could get the best faculties with ease and their comfort. We arranged today's panel discussion with a view to get the economic, industry, capital market, and investment perspective, a 360-degree view, to understand why economists, trade and industry and capital market gave thumbs up to the budget 2021. Where do we see the monetary policy complementing the government's efforts to turn around the economy and industry? How does the real estate, infrastructure and healthcare boost proposed in the budget take shape with implementation as a key? And last but not the least, where can we expect the economy, industry and capital market from here on? I'm sure all the 4 experts would enlighten us with their thoughts. With these brief remarks, may I request Vice President Abhay Mehta to formally introduce the speakers. Thank you.
Thank you, Suhas. Respected seniors in the profession and dear friends, we have been witness to one of the most bold and impressive Union budget ever presented in recent times. The attempt has been to put the pains of pandemic behind and focus on the future roadmap to kickstart the economic upswing. Today, we have a holistic view of the budget on the Indian economy. We have with us 4 stalwarts, each one an achiever in his own way and renowned for their views on the economy. I have a pleasant task of introducing the 3 panelists and the moderator for the session. I am introducing them as per their seniority. Mr. Bhagirath Merchant is the senior-most panelist, active in his 75th year. He is a chartered accountant and has done his MBA from New York Institute of Finance. He is an ex-president of BSE and also founder of BSE Training Institute in the year 1974. He is an investment banker and into stockbroking activity since past 50 years. During his tenure as president and chairman of the governing board of BSE, he implemented computerized stock trading, the BOLT system, and also established dematerialization, that is the paperless clearing and settlement system, by establishing CDSL, BSE promoted depository. He is a prolific speaker, delivering lectures on various topics and subjects related to financial markets all over India. He has also been a visiting and guest faculty at over 15 business schools worldwide. One highlight has been his lecture on the changing face of the Indian capital markets to the India Club, part of the World Bank, Washington, D.C., USA in 1974. Many of us might not be knowing, but Mr. Merchant has been a core group member at BCAS, and I had been fortunate enough to be part of the accounting and auditing committee, of which he was also a member. Now, coming to Dr. Niranjan Hiranandani. Mr. Hiranandani is also a chartered accountant and has also a doctorate in philosophy on the topic of housing revolution in India, challenges and prospects. He is the co-founder and MD of Hiranandani Group of Companies. He is considered to be a man who is instrumental in changing the skyline of Mumbai with the landmark project Hiranandani Gardens at Powai. His achievements in academics, business, and social work are many. I would restrict myself to some of the prominent achievements of Mr. Hiranandani. Currently, he is the national head of National Real Estate Development Council, which is known as NAREDCO, which operates under the aegis of Ministry of Housing and Urban Affairs. He is serving as member RERA Conciliation Cell of MahaRERA and is the immediate past president of ASSOCHAM. His group is instrumental in setting up a new business unit for data center known as YOTA and Logistics and Industrial Park Green Base. These initiatives provides an insight into the progressive and visionary outlook of Dr. Hiranandani. His social commitment to the society can be gauged from his involvement as a trustee at 14 colleges and 6 schools under Hyderabad Singh National Collegiate. He is also a trustee for the creation of Nathdwara Township, a place of pilgrimage for Vaishnavites as a heritage destination. With this, I will move to Dr. Ajit Ranade. Dr. Ajit Ranade, though not a chartered accountant, he is an engineer from IIT Bombay, a management graduate from IIM Ahmedabad, and has a doctorate in economics from Brown University, USA. Dr. Ranade is Group Executive President and Chief Economist with the Aditya Birla Group. He is a member of apex committees of industry chambers such as CII and FICCI. He chairs the research advisory panel of the Indian Institute of Banking and Finance and is a governing council member of CAFRAL, a research institute of the RBI. He is a board member of the Gokhale Institute of Politics and Economics and member of Academic Council of Meghnad Desai Academy of Economics. He received the Distinguished Alumnus Award from IIT in Bombay in 2009 and Scholar of the Year Award from Wadia Trust in 2010. Dr. Ranade's views are much sought after as an economist regularly on business channels and in national business newspapers and magazines. With the introduction of 3 panelists, I now move to introducing the moderator who will be asking pertinent questions to all the 3 panelists to enlighten us, Mr. Vikas Khemani. He is a chartered accountant and carries with him an experience of 23 years in capital markets. He is currently CEO of Edelweiss Securities Limited, where he has spent 17 years incubating and building several businesses to leadership position, including institutional equities and equity research. His strong business acumen and deep understanding of the capital markets has enabled him to have strong relationships with corporate India. He is actively associated with several industry bodies and committees, including the CIA National Council on Corporate Governance, FICCI Capital Markets Committee, and Executive Council of Bombay Management Association. He is also a member of Young Presidents Organization, a global forum for entrepreneurs and CEOs. He was awarded Young Professional Achievers Award for the service sector by ICAI in 2014. With these introductions, I'm sure all of us are in for the next 90 minutes of what you can say learnings. And with this, I will hand over the session to Mr. Vikas Khemani to take it forward. Thank you.
Thank you, Mr. Mehta. Thank you, Mr. Sheth, Mr. Pranjpe, and the entire management team of BCAS. Just a small correction that I am no longer the CEO of Edelweiss. I think that was probably dated. I left Edelweiss 3 years ago and started my own firm called Carnelian Capital in 2018. But anyway, nevertheless, so it's good evening to all of you, and it's indeed a great pleasure to be a moderator for such an esteemed panel. We have, I think, You couldn't have asked for more on a discussion like this. And what a day to start a panel discussion where India had just sort of scored a great achievement in the test with England. England is all out for all cricket buffs who do not know right now that England is all out 112 for in less than 50 overs. So in fact that's what India is. That's what Indian aspirations are. What we saw in Australia, and probably we are set to do an encore in India again. So this is what I couldn't have had a better background to start a discussion like this. Coming to, I think, budget. Many call this budget as a game changer. I think finance minister, before delivering the budget, raised expectations by calling it once in 100-year kind of budget. And I must say that she delivered on raised expectations. It is hard to deliver on raised expectations, but she did manage to. And this is, I mean, I've been following budget when 1992 budget when the budget was announced. I was in my school, and probably I wouldn't understand any of that. But I've been following budget for last 22-23 years, and I can say first time I found that nobody could find a fault with the budget, or very few people could find something to criticize in the budget, and that's including the opposition. So this is a very, very rare phenomena, and needless to say, you can describe this budget in many ways, but I personally, feel that this is the budget of many shifts. Structural shift of a mindset, shift of strategy. You can call a shift from control to opening up. You can call a shift from prudence to growth oriented sort of approach. You can call from a populism to again growth oriented approach. You can call it a shift from incremental approach to leapfrogging. And I think this shift was reflected in everything finance minister touched upon. And I think this change of the mindset you see in every part of the policy making in the recent past, especially post COVID. We have had many budgets before this budget, and you could see this shift reflecting in every possible ways. And what is heartening to know is that I think policy is working very closely with other regulatory and policy making bodies such as RBI to kind of have a coordinated impact of this big change in the mindset, and how do we sort of put India into $5 trillion economy as a big number being talked about. And today we will try to get answers from our esteemed panelists on how do they see this $5 trillion reality, how soon this is possible, how fast is this possible, what are the various opportunities, what's their perspective on various aspects of it, including inflation, including monetary policies. So without taking much time, I would request each panelist to have an opening remarks for about 4 to 5 minutes of what do they think of this budget, what are their exciting, what would they find the exciting points or takeaways of the budget, their implications on the economy and specific different sectors. And after that we will have a Q&A. So maybe I can go to Niranjan Bhai first, and followed by Dr. Ranade and Mr. Merchant. So sir, over to you.
A pleasure to be with you. Thank you very much, Bombay Chartered Accountants Society, for inviting us for this thing and to be along with the illustrious panelists. It's a pleasure to be with them because I know they have so much to share. I think there are several aspects of it, and I think, Mr. Khemani, you came out correct. It's a paradigm shift in terms of thought process and the direction in which the government intends to go in the next couple of years, which is obviously different than what the first 5 years of the Modi government did. Number two, I think it really stated very, very clearly that the time which has taken up in this COVID times, they are going to use the reform process, and this COVID time is going to be a leapfrog position rather than a setback position. So they utilize this particular time in order to do the reforms. Some reforms, of course, have met with resistance, like the farmers' protest, but otherwise they have tended to try and push whatever reforms are there in the policies which have to be done. But the real paradigm was obviously the couple of points which were very, very, very stark. The first, which was the expenditure side of the budget. I think they really went out on the limb. This was much more than what we expected, and putting in 5 lakh crores in terms of 5.54 lakh crores in terms of capital expenditure on the budget side. I think I was petrified. I thought it's going to be faced with the other side where they will have a surtax, they will have an inheritance tax, they will do a capital gains tax, they will do something or the other on the other side. And I tell you, my heart was in my mouth till the second part of the speech got completed, and I was pretty delighted. And I thought maybe she's just hidden it somewhere else and she didn't speak about it. It was that much fearful in my mind that she must have done some trick which I don't know, which I couldn't hear from the budget speech. But anyway, the long and short of it is that she agreed with what we had spoken, and Dr. Ranade was in one of the lectures together with him when we talked about, if you remember, that you must not look at deficit financing in that kind of way, negative sort of way. Dr. Ranade and I, myself, we were on a panel together where we mentioned this specifically, and Dr. Ranade supported the entire thought process that we put in therein, that this is one of those years where deficit financing should not be taken into consideration on that. That's another point. The third part, which actually was very pleasing, which was the fact that they said that the private sector should be supported and that the public sector should get out of the business of business. I think this is a real trend changer. The sale of 2 banks, going for IPO for LIC, insurance, and all these sectors to go up to 74%. I think these are trend setters which are there. And of course, various other institutions like Air India and others are on the block. And I think this is going to be good. We may speak whatever we want on the panel, but believe you me, the stock market and the investment portfolio is a good indicator as to how the world sees us. You and I may say so many things, positive, negative, good hai, acha hai, bala hai, kuch bhi bolo. Lekin the world is definitely looking at it in a proactive way, and the kind of growth which is in the capital market, I was stupid. I didn't invest into the capital markets as much as I should have. In fact, I was pretty fearful, so I didn't really do that, and I feel kind of stupid just now that, I should have seen it coming, and how did I not know? I'm bloody president of Assocham and interacting with the government, but humko kuch malum hi nahi pada ki ye kya kar rahe, and we had no hint the fact that this woman is going to do a bright job, obviously, at the Prime Minister's instance, so I'm pretty happy with it. The other part of it also looks very interesting and is the fact of 2 segments, again suggested by us in terms of the infrastructure bank. I think I mentioned it about 32 times on TV on various occasions that India without a good infrastructure bank is not going to grow at all. It's a stupid statement which was picked up, but I said it 32 times and I feel kind of, damn good, whatever I said came. But in reality, to be honest with you, we never thought and we weren't too sure about it. So I'm really very happy that it has come. And without this thing, I think we need 5 infrastructure banks. I think 1 is not going to be enough. They should encourage more infrastructure banks. If you have 1, then it becomes difficult to actually sell. If you have more than 1 and there is competition, I think it would be better. But anyway, they'll mange more. Even I'm happy with 1, but I keep on, now I will ask for more than 1. But in reality, I promise you, I'm very, very happy about the whole thing. Asset monetization as a concept, very clear. Land asset monetization, sale of businesses, all this combined together is there. And the last point I want to make is the fact that every country which has had double-digit growth in the history, and I will be corrected by Dr. Ranade if he has to correct me on this, I will take the correction. There is no country in the world which has gone on double-digit GDP growth without excessive investment in infrastructure and housing. And I'm not talking about housing alone, which is my subject, but I'm talking about infrastructure and housing. So if there's been a double-digit growth in China, it's not manufacturing. It's actually infrastructure, housing, and those segments, and ports and other developments which actually cause the double-digit growth. That is why Europe, Japan, even America can't move to a double-digit growth because that segment is really so large. Of course, the base of China and America is so big that even a smaller growth is really going to be far ahead for us to compete with. And I think that's an issue that we really need to do. But as Mr. Khemani correctly said, great budget in terms of it, part trend changing as far as this is concerned. Lots of good things which are there. Of course, I severely didn't like the fact that you still have a 42% tax rate for individuals. It's kind of nonsensical. I wish they would have at least brought that down into some reasonable rate. But, when I asked the finance minister that question, you know what she said? She said, if I'd started touching the tax rate, I would have moved it up. So you should be grateful, Mr. Hiranandani, that I didn't touch the tax rate, because the only way I would have touched the tax rate was push it up. So I kept my bloody mouth shut after that. But since we are talking here, I wanted to tell you that I think when she didn't touch the tax rate, she didn't touch the tax rates. I'm very happy. But I still will criticize that you can't have a 15 and 25% tax rate for corporates, 35% plus for partnerships and LLPs, and individuals to be taxed at 42%. Come on, Bombay Chartered Accountants, let's put a protest on that at least.
Great. Thank you, sir.
Sorry, I took a little longer time.
No worries. Dr. Ranade, can I have you with your opening remarks, please?
Yeah, thank you. Thank you, Vikas, and thank you to the Bombay Chartered Accountants Society for inviting me. I've been with you on several occasions, so happy to be back. And maybe you can give me an honorary membership, even though I'm not a CA, but I hang out with CAs a lot. I think I've acquired a CA personality a little bit. So I didn't know that Mr. Hiranandani, I think he kept his CA personality hidden from me many years, but lately I've discovered it. I'm very happy to be associated with him for several years, from in the days of Indian Merchants Chamber and so on. And I've been very happy to have journeyed with him, and the meeting that he mentioned with the FM recently. So first of all, let me just straight away endorse and concur what he said, that infrastructure growth for a country like India is absolutely essential. These are built for multiple generations, not only for today's generation, but tomorrow's unborn generation, and maybe 3 generations, so that the asset you build today, whether it is housing, whether it is infrastructure like roads, highways, airports, they are actually built for multiple generations. So they're going to be built and they're going to be enjoyed and consumed by future unborn generations. So it is only fair that tomorrow's generation or day after tomorrow's generation also bear a fair share of the burden of cost of building it. That is what we mean by deficit financing. When we finance with the deficit, we are borrowing from the future. See, all deficits have to be paid either by taxes today or by borrowing. But borrowing is nothing but paying taxes tomorrow, because tomorrow's generation. But tomorrow's generation, it is fair to tax them. It is fair to tax the unborn generation, because they are going to benefit from very strong public goods called infrastructure, which is going to be at least used for over 2 generations, if not longer. America, by the way, is currently in the process of revamping or refurbishing the infrastructure, which was built during the Second World War years, or just after that, 1940s and 50s. So after 50, 60 years, they are finding that many of their roadways and so on are crumbling, and bridges. So, but typically it goes on for 60 years. So anyway, my short point is, if you see deficit financing today, it is because some of that burden is going to be passed on to tomorrow's generation, and because they are also beneficiaries. So I just want to endorse quickly, maybe it's worth repeating. I think there are 4 or 5 points which are positive about the budget. Number one, no new taxes, because there was a lot of talk of COVID cess, or a tax on the super rich, or some kind of inheritance tax, or a wealth tax, or something. No new taxes. Number one, huge relief for everybody. Secondly, boldness. There was a chapter in the economic survey which was tabled just before the budget. A whole chapter devoted to how sovereign rating agencies, international sovereign rating agencies, have been unfair to India And in fact, consistently, India with zero track record of a default and the fourth highest foreign exchange reserves in the world continues to get a rating of BBB minus, which is just a notch above junk level. And so many other countries have a rating much higher. They have defaulted in their past, and they continue to be much more in a macroeconomic sense, on a vulnerable, on a weaker state. So this has been argued in that chapter. But anyway, so the second reason I think is the boldness which has been shown that we are not going to be unnecessarily apprehensive about what the rating agencies will say about India's fiscal deficit. And really, you've seen the boldness. Of course, the pandemic calls for it, but the boldness was there. That is the second point. The third point is what Mr. Hiranand already said, that again, a boldness about articulating a privatization strategy. That whether it is monetizing land assets owned by the government, or privatizing banks and insurance companies, or making it easier for foreign sovereign wealth funds to invest in India's infrastructure, or pension funds also coming in. All that basically says that the private sector will get a better play, bigger play. So, today's speech also, I think Mr. Modi said, Prime Minister Modi said, the government's business is not to be, it's not government's business to be in business. So he said that in Parliament the other day, that we should respect wealth creators and so on. So I think this is becoming a theme. They have articulated that except for 4 or 5 strategic areas, everything else will be vacated by the government. I hope we see a lot of action in this front. That's what the budget is also articulating. So that's the third point. So let me just recap. Number 1, no new taxes. Number 2, boldness and fearlessness about deficit financing. Number 3, very bold, loud acknowledgement of the role of the private sector. And number 4 is all the details. We won't go into that. I mean, very big push on infrastructure, very big push on healthcare, which is a broader definition. It includes Swachh Bharat and vaccinations and so on. So what has actually happened is that the budget size itself is gone up only by 1%. So contrary to what people think, it's not really an expansionary budget in that sense. The total budget size is up by only 1%. But infrastructure spending is up by 25-35%. Healthcare is up by 100%. So something else has gone down and something else has gone up. So important areas have gone up. We can discuss if there's time what has gone down. So there's been rationalization. So I think that's what it is. Going ahead, my forecast or my anticipation is GDP will grow at around 11 or 12% in real terms. In nominal terms, perhaps 15%. The exchange rate will remain stable or maybe slightly appreciate actually, because there's so much foreign exchange coming into India. Inflation will be around 4.5% to 5%, which has been India's, it can't be too low because then you don't have enough incentive for producers, because producers need some pricing power. People who work in factories and offices, they need some annual increments. If you give them an increment of 2%, in America, they will dance with joy. But in India, if you give a 2% increment, you're going to have a very unhappy face. So typically, people expect 9%, 10% as increments at the very least. I'm not talking about bonuses and variable pay. I'm talking about increments. So if everybody's getting an increment of 9%, so surely inflation has to be 4 or 5%. So that's what I mean. So inflation are at 4 and 5%, stable rupee, high growth. That's what I feel. And the challenges very quickly would be to successfully meet this deficit financing without causing an upward movement in interest rates. That is going to be the central challenge. And the main cricketer there, the Virat Kohli of this game, is going to be Reserve Bank of India. And I hope he has enough people to back him up, like Mr. Rane or Mr. Sharma, someone, Rohit Sharma. But that's the main challenge. And relatedly, of course, the privatization program has to go through. We can talk about whether the target is ambitious or not, but we can come back later. So yes, those are my opening comments. Thank you.
That's great. I think it's a great note that GDP can hit 11 to 12% real terms, which is a great sort of opening comment. Can I come over to you, Mr. Merchant, for your remarks?
Yeah, sure. At the outset, let me thank BCAS for inviting me to join this eminent panel of intelligent people on this particular budget. In my opinion, this particular budget is not only showing a paradigm shift, but it's a thinking out of the box. In my opinion, this is a statement of real intent, a serious intent, that what the government wants to do. From the stock market points of view, I will restrict my comments on this particular budget, is that the emphasis given on to the manufacturing industry is very, very important. Let's look at why manufacturing industry has suffered. Number one is the infrastructure shortcomings have been one of the factors that have deterred investments in manufacturing and raised cost of production. The larger investments in this sector, including making the railways future ready, are very, very welcome. Look at the announcement that the double-digit growth of manufacturing is essential for achieving the target of creating $5 trillion economy. I think it's perhaps the first time government has announced a quantified target for the first time, a quantified target of growth. This needs to be backed by a comprehensive planning and how the manufacturing industry will be facilitated in becoming more competitive. Sustainable competitiveness would require that both government and management work hand in hand. The role of the government, especially the state governments, which I have seen in my experience, associated as independent directors with some of the listed companies, is that should be of facilitative instead of regulatory. The factors that have increased cost of manufacturing till now need to be reviewed. This will enable sustained higher rates of growth of manufacturing that will create rapid increase in employment opportunities, mainly in a host of related activities like transportation, the sales network from wholesale to retail, after-sales service and repairs, financing, insurance, skill development and training, and so on. Manufacturing will also create a large number of ancillary industries, mainly within the MSME sector. These all will be productive jobs, and the incumbents will be able to lead reasonably comfortable lives and also with self-respect. At the same time, to enable poor sections of society to lead better lives, they do need access to education, health, and other essential services at an affordable cost. During the last few years, the government has been implementing various schemes to make this possible without burdening the manufacturing industry. The budget takes this forward with substantial allocations for health and education. Even the budget carries forward the intention of the government to double the agricultural income. Now here, what the government is emphasizing is that besides improving the agricultural productivity, right, it has also to substantially increase the value addition to agricultural produce. And that's where we require substantial investment in agro industries, particularly for the creation of storage facilities, cold storage facilities, warehousing, and all the agri producers must take direct advantage of this infrastructure. Now, this is very important because the purchasing power is with the rural India. And if they have a good monsoon and they have a good environment available to them, including the infrastructure facilities for their agri products, I think industry can flourish. And with this emphasis on the manufacturing industry, I think this is going to be very good thing. Another thing which I would like to mention, right, is the serious intent of the government this time on the privatization. And this privatization, though they have fixed the target of 1.75 lakh crores of rupees, I think it could be easily exceeded. That's what I feel. Because one single IPO of LIC with 10% dilution could garner around 1 lakh or a little better amount. And then with the privatization of 2 banks and 1 general insurance companies and followed by BPCL, Container Corporation of India, Shipping Corporation of India, all these things would certainly, I would think, exceed the target. And that's where the government, today I read about that the toll collection through FASTag has crossed 100 crores of rupees a day. So now you can imagine in the coming fiscal, we will have 36,500 crores available only in the toll collection, which is more than 1/3 of the total infrastructure allocation which the government has made. So regarding the finance part, I think India need not worry, because without growth, and that is also without the emphasis on the manufacturing industry, stock market can't reflect, the future capital appreciation that everybody is looking for. I think I will restrict myself to this particular, short comments, and then be specific, by answering the questions relating to how the stock market really look at, right, further earning cycle and further investment cycle, bringing in that expected growth. Thank you.
Yes. Great. I think we seem to have a great consensus on the that this budget is really a game changer budget of shifts, and on many counts, and especially one thing is coming very, very common is the government's intent of increasing the role of the private sector, and government is looking to do lots of things towards that. In fact, today. And just one more small thing, but government opened up all the government companies to deal with all the private banks, which so far was restricted only with the PSU banks. I mean, this is one more shift, but point is that government seems to be fairly determined in terms of reducing their control and opening the private sector. And Prime Minister himself spoke on the floor of the House, and so there are lots of indications towards that. And Mr. Hiranandani, I want to come on this point to you, because this role of the private sector has been talked about for many decades, many years, and and it seems that it is going into right direction at this point in time. So if this were to become reality, or if this were to get, how do you envisage over next 5 years, 7 years, what role private sector can play, and how it will create opportunities, how it will create wealth? What are the subtle and direct or indirect changes one can expect, apart from the divestment only, but at a structural level?
I think the direction is 100% correct. Namely, the government is getting out of the business of business and leaving it to the private sector, focusing on infrastructure, and hence the enabling factor, which Mr. Merchant talked about, is getting done. So the manufacturing sectors gets a boost because all the other infrastructure in terms of logistics, railways, airports, etc., are getting developed and taking it to the next level. So I think that direction is correct. One of the things which worries me, if you ask me informally, is the fact that this clarification of Atmanirbhar Bharat is not coming out. And I think though they are talking about it subtly, it's not really clarified to that extent that it needs to be done, because industry, when it wants to invest billions of dollars, it has to have clarity about all these aspects of it if you want excessive investments to come into the market in a big way. So I think this part of it, where to what extent can you import from intermediaries from China? What is it that they're going to permit or encourage or discourage in the next few years? I think this part of the dichotomy is not coming out as clear as far as the government is concerned. And after making a statement on Atmanirbhar Bharat, which is a good statement, I'm with it, with the statement, but I'm not very clear. And lots of people, as I headed ASSOCHAM, asked me this clarification, then what is it that can I do? This intermediate I've been importing for the last 30 years from China, am I not going to be permitted, or is it going to become more expensive? I need to understand that economics and government needs to clarify these issues. Having said this, the second part of it is very good and very important. And I think Mr. Merchant talked about it, Mr. Ranade indirectly said about it, which is 11% GDP growth cannot come without investment coming in from outside. I mean, they didn't specify these words, but I'm just trying to go one step ahead of it. So if you want 11% GDP growth, you will look at investments to come into it as from an external source, all right? And there is so much money all over the world that we need to take advantage of the fact of surplus monies and dollars which are being printed all over the world, and we should take that opportunity to take that investment. The stock market is already taking the benefit of it, but on the FDI side also we should have an equal. The third part of it, to answer your question, is the fact that the ease of doing business is not yet deep down. What is happening at the top level is certainly an improvement. At the grassroots level, there are lots of last mile issues that we are still facing in terms of industry, in terms of business, and all these things. So, though the intent appears to be there, the bureaucracy is still not married to the issue, and there are lots and lots of issues where last time factories are put up and everything is there. The last connectivity, which is half a kilometer or 1 kilometer, is stopped, and the factory is delayed by 1 year. You have invested 2,000 crores of rupees in the factory, and that last 1 mile road or connectivity or bridge or pipeline or a railway line is just not getting done. And I think those are the issues where they should say that private sector, yes, but if there is a problem for the private sector, the government must give a helping hand in order to see the efficiencies of the projects are done. And this is what really needs to come out of it if you want to be there. These two aspects of it, I think, are not talked about as much in the overall scene. And I'm just trying to flag off the issues which are normally not spoken in any of the meetings or in the announcements that happen.
Great, sir. I think the only thing is I could add is that when we interact with lots of companies in the chemical sectors and all, one thing which we are getting, that government has become a lot more proactive in terms of focusing that which intermediate we can now produce in India rather than allowing it to import. So a lot of focus on building Atmanirbharta on electronics, chemicals, where we have been so dependent that our current account deficit has been glaringly high, and which is if you ask my opinion, the historical fault lines have always lied in our current account deficit, right? So, and that is where probably I'll take my next question to Dr. Ranade, that first time probably in the history of independent India, we are getting into a situation where we will have a current account surplus country, right? If I were to look at incremental revenue of $150 billion coming from IT, lots of impact of Atmanirbhar Bharat, both on import substitution reduction as well as the export increase. We are in a situation where we will see a sustainably current account surplus environment over the next 3 to 5 years. And that will have a far-reaching impact at the macroeconomic level, in terms of managing your interest rates, in terms of managing, your currency. And so how do you see this? Because this will have implications to every investor, every businessman, every industrialist, including a small trader. So, would love to get your perspective that how do you sort of see, and you alluded to the fact that exchange rates also will be, rupee will be more appreciative, inflation will be under control. So I think my next question, I would love to get your insight on that part, sir. Sir, you're on mute.
India has always had a balance of payment surplus. So balance of payments is balance after the current account is taken care of. So current account is the difference between import and exports.
Yep.
Our imports are always more than exports because we have to import crude oil and capital goods. And our exports are always insufficient to pay for imports. So there's always a shortage. That is called the deficit, the current account deficit. We have always had that as shortage. So who pays for the shortage? Who pays where do we get those extra dollars? That comes from capital flows. All the stock market flows, the FDI, private equity, ECBs, external commercial borrowing. That means it reflects the confidence of foreigners to give money to India, dollars to India, whether in the stock market or as commercial loans. So that's a badge of honor. It's a pride. It's a badge of pride that the global investor community consistently has supplied the shortfall, which we call current account deficit, which of course should not be ballooning, but about 1 to 2% of GDP. Consistently, that has come as balance of payment surplus. And for a growing economy where consumption has to grow, people's purchasing power has to grow, people's standard of living has to grow, consumption will always exceed the domestic production capacity. I mean, at this stage of our evolution. So I think having a current account deficit is nothing to be ashamed of. Actually, a developing economy typically has current account deficit. The question is, how do you fund it? And if you have the confidence of the global community, the fact that, as you said, what we have is a balance of payment surplus. There is a difference between BOP and CAD. Current account deficit, but BOP surplus. And that's why the BOP surplus money that's come in has led to a situation where we have the fourth highest foreign exchange reserves in the world at $580 billion. The countries like Korea, Malaysia, even China, they all have export surpluses. So their dollar accumulation happens because their earnings are more than what they pay for imports. So no surprise. I mean, of course, they also have large foreign exchange reserves, but our foreign exchange reserves have climbed to a mountain despite the fact that current account is in deficit. So that's a unique thing. So therefore, I'm saying I don't think it's particularly important or even something great if our current account goes in surplus. It means that we are not able to consume more. I think our per capita consumption increase. We are still per capita consumption is $2,000. The southern European countries are at $6,000, $7,000, $8,000, $10,000. So as our consumption expenditure increases, we'll have to import stuff. See, that importing stuff is not contradictory to Atmanirbharta. Atmanirbhar to me means Atmanirbhar with Atmavishwas, self-reliant with self-confidence. So it is not protectionist. If we are going to go back to the 1950s and 60s early model of what we call, they call it the import substitution model, that you just cut off. You have very high 100 to 200% import duty. And, that there was a time and place in India's evolution when maybe it was necessary. I don't want to use the word Nehruvian model in a negative sense. At that stage of just after independence, there was a deep skepticism and deep distrust of colonial powers. We didn't want to be exposed. The what is it called? The East India Company came as traders, right? So there was a time in the 50s and 60s, but that protectionism stayed for too long. So we should be open, but so self-reliant means to produce in India at global scales of efficiency and competitiveness and excellence and quality. So produce for the large domestic market, produce for the global market. The global market is demands excellence, and therefore it's Atmanirbhar with Atmavishwas. So I think, we are slowly reducing, the latest data from India-China trade deficit has steadily gone down in the last 3 years, which means we are moving in the right direction, I think. So I just want to make the difference between BOP surplus and CAD.
No, fair enough. I think, anyway, I mean, the only point is that if the IT sector grows at a pace which is growing, right now IT sector receipts are considered not as a part of export, but technically it is export. So it is services export. It is services export, right?
Yes.
So
if you take it is included in the CAD calculation. It's included.
CAD. So
it could happen that at some point our CAD will go positive, which is fine if it is happening at a time when per capita income is at $4,000 or $5,000. I'll welcome it. But if it is happening at a relatively low income level, I think we should try and find ways to increase consumption in India. The promise of not 200 million middle class, but 500 people in the middle class. All the companies who came in the 90s, they were given this picture that India's middle class is going to boom, it's 250. It didn't expand as fast. Today, we have a situation where inequality has grown. So I would like to see a very large middle class in India, at least 500 million people out of 1.3 billion. And that means this middle class is going to consume like Southern Europeans. Their lifestyle should be of that. Of course, with due respect to sustainability and recycling and renewable energy and climate change and lower CO2 carbon dioxide footprint and all that, fully with that. But Mr. Khemani, I'm not against CAD negative or positive. I'm just pointing out the difference.
Right. Mr. Merchant, coming to you, I think, we can't have a, $5 trillion economy and not talk about the opportunities in capital market. How should one look at it? What's your sense on how the, capital markets, we will see wealth creation over the next 4 or 5 years as India's per capita income grows to $3,500, $4,000 or GDP crosses $5 trillion over the next 4 or 5 years, which this budget is enabling. So how should one look at opportunities from a capital market perspective? Any perspective would you like to share?
Certainly. I think looking at what has happened in the current fiscal year, I would say thanks to pandemic. Because this particular pandemic regime has opened up the vistas for cost rationalization with the corporate entities. Barring the first quarter results, we have seen the second quarter and the third quarter results, we have seen upswing in the earnings cycle. And with this particular union budget providing the opportunity for incremental investment cycle, and then we are virtually, seeing the visibility of capex by the private sector companies as well as the public sector companies very meaningfully. I see this particular cycle will take us, I believe, I've written down that the December quarter has witnessed very robust earnings with several companies meeting expectations. The earnings trajectory has improved across the spectrum. If you really look at this, autos, banks, cement, metals, consumer durables, technology, just to name a few, right? Now, these domestic cyclicals have led the way and beating consensus expectations by a huge margin. Now, what this particular budget is also going to do, besides the emphasis on manufacturing, right, is the banking and financials. Now, the banking sector, if you really look at, how it is going to make a difference in our this thing, the budget has been most favorable for the cyclists. And banking and financial sector remains one of the best placed to benefit from the cyclical recovery. Apart from some of the direct measures such as PSU bank recapitalization and the proposal to set up ARC AMC for absorbing the stress on the bank's balance sheets, the bigger story for the sector would be in the form of a pickup in the investment cycle and an improvement in the economic environment, leading to better consumer sentiment. Now, this has a dual impact on revival in the credit growth and improvement in asset quality. Now, that is a very important factor for the entire banking sector, which also would include NBFCs. In fact, what has also supported the buoyancy in the BFSI sector has been the positive results by a couple of banking giants like ICICI Bank and SBI, which just declared around the budget presentation time. And if you'll see, both of them gained about 10 to 15% and also provided a leg up for the entire BFSI sector. Now, the formation of ARC also is auguring well for the entire industry, though it may not be a permanent solution for all future problems. But it definitely provides a breathing space to some of the ailing banks and an opportunity to rejuvenate. It also provides a strong signaling mechanism that the government is willing to support the BFSI sector, which is the lifeline of the economy. Now, if you really look at this particular thing and the privatization emphasis that has been given, how the LIC's IPO that would come is expected in the second half of the next fiscal. And prior to that, at least we will have BPCL, Shipping Corporation, Container Corporation, at least these three issues coming. Along with that, if this market buoyancy continues and these issues receive a very favorable responses, I think the second half of the next fiscal year will certainly, accelerate the pace of capital raising, right, for the disinvestment program. Now, coupled with that, what we have to really look into this, how the government has made sincere efforts for the LIC and the bank's IPOs. For LIC, the DIPAM is already appointed, right, a valuer, right, to value the embedded value of the entire corporation. 2 pre-IPO advisory firms have also been appointed. So there are 3 stages of this particular privatization. The first is the expression of interest, which is over. The second one is the due diligence and the share transfer agreement. Now, currently DIPAM is in the due diligence particular sector.
Right.
And the third would be the closing of transactions.
Right.
Now, what we are trying to look at this particular case, this has already been made, right? It's an amendment in the present budget itself.
Yeah.
So therefore, LIC's IPO is a reality. Banks privatization is a reality. And in the banks, which I say, even if the government attempts to privatize the smaller banks, any one of like Central Bank or IOB or Bank of Maharashtra, right? And then if, depending on the success of that, which I am very confident, right? The government immediately would attempt in the 22-23, right? Any of the larger banks, privatization like Bank of Baroda or PNB or even Bank of India, they will leave aside a state bank. But all these things augurs well, right? Because of the investment cycle, the banking industry is going to do a very quality lending.
Yeah.
Improvement in the asset quality, coupled with the infusion of over 3,41,000 crores of rupees for recapitalization, including 20,000 crores for the next fiscal. And in the last 4 years, if you look at the bank's balance sheet, which have become more healthier, because the banks have already made the provisions for the NPA. So today their balance sheets are very healthy, very cleaner, right? And therefore, all these things would augur well, right, for the entire stock market.
Sure. Great. I think, very, very, valuable comments. And again, I think you rightly said, sir, that, as the Indian economy hits $5 trillion, and if I were to look at current market cap of India is about $2.2 trillion. And even if you look at 5 years, and generally the market cap to GDP ratio is, anywhere between 0.8 to 1.2. And even if you look at any range, you will see a wealth creation of almost close to $5 trillion. So from 2.2 to $5 trillion, what we have created in 70 years, you will see that kind of wealth creation over the next 5 years. And that is what I think kind of potential which we have in this next 5 years. And I think great part is that this budget sets the ground for that wealth creation, that leapfrogging opportunity. And I think when we have Niranjan Bhai on with us, we cannot not speak about real estate, right? Because that's where, and again, real estate is the one sector which has, come out of 10 years, or it has been in trouble for 10 years or maybe more. But now we are seeing.
I'm on a VC, I'll just call you.
And, so that change is visible, and would love to get Niranjan Bhai your perspective on, how should one look at real estate as an asset class? What are the opportunities? Work from home, this new paradigm shift, what kind of challenges it brings on tables? Would love to get your perspective. So real estate is the one sector which also has an amplifying impact on the economy, in terms of building materials, consumptions, and a lot more, so on and so forth. So would love to get, sir, your perspective.
Okay, the first part of it is, people used to say real estate is doing well or real estate is doing badly. That story is now no more true. It will be A company doing very well, B company doing ordinary, and C company doing badly. And fortunately, just now, it's a very egalitarian situation. Previously, it used to be that the big ones are doing very well and the small ones are doing very well badly, so there is consolidation. Now, neither is true. The first part of it is that there are big companies in soup. I've been appointed by the Supreme Court of India on the Unitech board. 30,000 tenements have not been delivered and they are in real soup, and we are trying to put up a resolution package which is likely to appear before the Supreme Court in the next fortnight. So that's the one situation. The second situation is that the regulator has come. In the last 3 years, we had demonetization followed by regulator, followed by IBC, followed by GST. All these had a negative effect in terms of the business of business to be there. And there were many companies who were able to overcome this situation. Those which overcame the situation are able to do it and did production of these things have seen in the last 4 months a huge amount of growth. So what has really happened is those who are doing well and were properly capitalized, who did not have overlay of debt, didn't make blunders in terms of the type of product you created, have done reasonably well. So that's one part of the story. And this is going to continue in the next couple of years, is the one part. The growth in the terms of real estate is, even today, in spite of everything, growing at 11, 12% compounded per annum. This is led by the affordable housing segment, which is the PMAY scheme. You don't see it in Mumbai, you don't see it in Delhi. But if you look at the overall thing, in the last 3 years, 1.1 crore houses have been given the benefit of the PMAY scheme. And these will be delivered by 2023. They have an interest subsidy of 3% for 15 years. and almost 1 lakh crores of rupees will ultimately put, out of which 80,000 crores have already been budgeted and given to housing finance and other companies and banks and financial institutions to do it. So housing as an overall subject will do. Now, so what is wrong? What has gone wrong is that those projects which are stuck, which are NPAs or have been stuck over there, nobody is willing to touch those institutions or those projects or those banks. So we came up with a suggestion, and I was party to those suggestions, wherein we needed what you have an equivalent of a bad bank, but in order to complete the projects. And that is how the Swami Fund was created of 25,000 crores, of which 10,000 crores was given by the thing. Now, over a period of years, the Swami Fund is doing a good job, but the job is not enough because we need 1,25,000 crores. Fortunately for us, private sector banks are now ready to set up an equivalent of Swami funds on the same terms and conditions to do it, but it's still not happened. We have talked to FM, we have talked to RBI governor, but they're saying, let us see the rollout of this Swami fund before we really go in for the next funds which are to be there. And we have got various banks and financial institutions to do it. Now, instead of talking about that in retrospect, I see a growth of at least 15% compound per annum in the real estate sector in the next 5 years. It will be partly in terms of residential, substantially residential. Work from home is definitely got some setback into it. But as just now we got the estimate from Mr. Ranade of 11-15% GDP growth over there, I promise you real estate will also be at the same rate, if not higher. So this thing and this multiplier effect of this to various industry. But look at the pricing which has happened. And Mr. Ranade, please clarify. Steel prices, cement prices have just gone beyond imagination. And if you want to run infrastructure in this country, we cannot afford it at the prices of steel and cement which are there today and doing it. But real estate will grow as the GDP of this country definitely grows. And there is a huge opportunity in real estate which will continue. But those segments which are affected, which are quite large, we still haven't got enough solutions for them in order to find a way out, in order to close them. So more of the Swami Fund equivalent needs to be done in the next couple of months in order to see that those stuck projects, stuck companies are really rationalized, consolidated, whatever you want to call it, and find out a way to actually get solutions very quickly. So I'm hoping that we'll be able to get into this whole thing. But growth is there. I mean, you don't have to worry it, but everyone is not going to grow. So the stock market will choose who are the persons who need to be invested into, and various other segments are coming. You have seen the REIT market go very strong. I think that will continue. InvITs are going to grow in a very large way. The NHAI is also taking up the InvITs in a very big way. So I think funds coming into infrastructure and into structured areas in real estate will also grow tremendously. We have seen in the last 2 years a large amount of money coming into REITs and InvITs. This year, my view is that in the coming financial year, it will be at least 3x to 4x of what has happened last year. So, good future.
Unfortunately, we don't have your company listed in the markets. So when are we seeing that, sir?
We are not going to be listed in the real estate sphere because we have diversified now into various other things, and we are into data centers, we are into gas, we are into logistics space, and we have done a 50-50 partnership with Blackstone in the industrial and warehousing space. Okay. So that's the way we are going.
Okay, great. Dr. Ranade, I know you have to leave by 7:30, so I'll probably ask you the final question. And India has been starved of investment cycle for last almost 10 years. The gross capital formation or capex and corporate capex has been kind of abysmally low, and which seems to be seeing some sort of green shoots, including your own group has announced significant capex in the recent past across various existing business and new business into paints, almost 5,000 crores. So I would love to get your perspective. So how do you see the investment cycle picking up? Because that will also have a multiplier impact at the economy level and various opportunities within the economy.
So first of all, anything which has Hiranandani name associated with it, you can close your eyes and invest in it. So don't wait for him to invest in only real estate. So I'm not a stock market expert, but the name and the person. So anyway, so don't I think all the sectors you mentioned are really promising sectors. Things like warehousing and commercial and data warehousing, the new growth area, 20% growth. You were asking me about that, and I want to also reiterate what Mr. Merchant also said. See, what has happened is that the previous slowdown over several years was because of the twin balance sheet problem. The corporates were stretched and banking were stretched. And banking balance sheet stretch went all the way back since the days when they had to lend substantially more to infrastructure, which is not the business of bank. Infrastructure requires funding for 30 years, 50 years, and banks cannot do it because banks have demand deposits. Banks have to be ready with money for depositors at moment's notice. So they can't lock up their loans for 15 years, 20 years. But unfortunately, during the 2010-13 period, 15% of bank credit was locked up in infrastructure, and that got caught in approval delays and environment clearances, disputes, and slowdown, and therefore PPP model problems for various reasons. So we had the twin balance sheet problem. Banks were saddled with rising NPAs, and corporates had borrowed too much, to the hilt. Now both these problems are getting sorted out. That's what I think Mr. Merchant also referred. So we are in a different situation. You're right that prior to the pandemic beginning, we had seen investment to GDP ratio stagnating at 28%. It should actually be as high as 36%. But as I said, one of the limiting factors was this twin balance sheet problem. That has got sorted out because, first of all, bank recapitalization, the IBC, corporates have deleveraged. Imagine the biggest company in India, Reliance, said we want to be zero debt free. That's called deleveraging. So a lot of corporates are deleveraged. And thank you for mentioning Aditya Birla Group. Yeah, we in fact have not 5,000, but we have announced some 12,000 crores worth of, I think, investment. 6,000 crores in cement expansion alone. And Hindalco metal product.
5,000 in paints.
And paint, 5,000 in paints. Hindalco is another 5,000 crores, I think. We also acquired a few companies in fashion. So there's multiple areas across the landscape. And not to forget the $2.8 billion acquisition of Aleris, a major aircraft material manufacturer, aircraft materials, which is a North American company. So of course the capex, but I'm not here as a spokesperson for my group because those kind of decisions don't depend on downturns and upturns. They are more longer term, and they have to fit in with the strategic needs of the group. But I see the investment pipeline now coming back. The national infrastructure pipeline intends. The aim is to spend for 20 lakh crores per year. Even if we achieve half of that, it still will go a long way in inducing private sector investment.
Right.
So I think and not to forget all the other privatization initiatives. So I think we are seeing a kind of a decade-long investment boom, I think. And the usual factors are also there, demography and all that. Because I believe the pandemic has been not a structural setback to the economy. No doubt it's a big episode, it's a health crisis, and in combination with an economic crisis where we had to have a very severe lockdown. And there was a very difficult period where you had to choose between lives and livelihoods, as you know. Now, looking back, there is a feeling that we were able to actually achieve at least the death count, fatality. In America, they have 500,000 fatalities. The biggest economy, the richest economy in the world, has more people died of COVID than combined the number of Americans who died in World War II, in Korean War, in Vietnam War combined. It's not to be taken lightly. So, but India, because of its lockdown, I think we were able to keep the death count. It was a large country, it's 3 times more population than America, 4 times. But the death count was kept at 1 lakh of them. So anyway, that's a different topic. So I'm saying I see this investment in sort of a boom, and of course not to forget areas like infrastructure and housing. India has an official shortage of 28 million homes. Majority, of course, will be in the like this smaller category, affordable homes and all. But that's a huge, that needs to be filled. So I see a big investment pipeline coming. And therefore, that will also have a large participation from private sector.
Correct.
And just one last point about Mr. Hiranand is about his point on steel and cement prices. Sir, you have to take it up. The fact is that steel people say iron ore prices have gone up. Aluminum people say the bauxite and the mining royalties have gone up. Coal prices, by the way, are going up and up and up. They are now getting close to $80-90. So it is and commodity rally, my God, all the cheap money, some of it is going into commodities, metals, as if they are speculative assets. We can understand speculating in gold or even Bitcoin, but people are speculating big time in copper, aluminum, zinc, lead. They have become asset classes. So it's a separate topic, but I understand the pain that as construction you feel. But I think, and producers need some pricing power, no doubt. So I think what's the golden middle? I believe 4.5% to 5% inflation rate is a optimum for it.
Before I let you go, sir, one audience question is asked, and it's maybe a brief question: that is there something in this budget which could have been done, has not been done?
See, this is the easiest thing to do for any budget. I can close my eyes, and for any budget, I can make if I'm an opposition leader, I would have said to finance minister, "Oh, she missed out so many things." The list of things not done or missed opportunities is an infinite list. There could have been universal basic income. There could have been increased the PM Kisan to double the allocation, the funding. We need a modern army, armed forces, army, navy, all need substantially more capex. So I am not going to go into this because budget making is a balancing trick. You only have this much. Even though it's 36 lakh crores, you only have 36 and not 37 or 40 lakh crores. And there are competing needs. So this time the priority has been given to infrastructure and healthcare. Therefore, what has gone down is, I think some fertilizer subsidy has gone down. The National Rural Employment Guarantee Scheme allocation is down. Some tweaking has been done. The defense spending is up by only, I think 1 or 2%. So it's a trade-off and a balancing trick. But I think it's really a remarkable budget. One must admire the fact that the balancing trick has been done in such a way. See, we have not seen the stock market euphoric for 10, 15 continuous days after the budget. That's very, very unusual. Mr. Merchant is the expert in that area. So that itself should tell us something is going right.
Yeah. Absolutely.
So I think I'll take your leave because I had made a commitment. So I thank you for letting me be part of this session today.
Thank you very much, sir.
Yeah.
Thank you so much, sir.
Thank you.
So, Mr. Merchant, the next question I think is also from one of the participants, and since you are the sort of guru on the capital markets, somebody's asking that is P being already high, Nifty P already being high at 40? How do you see? Is there a bubble being made, or how do you see this current market environment and around comments around that?
I think these kind of questions, as Mr. Ranade also referred to, like the comments on budget. Same is the question with when we talk about the fundamentals and the technicals of the market. People are still glued to those age-old concepts of P ratios and whatnot. But in reality, the market doesn't operate like that. The market, from this particular budget point of view, what we have to really see is that it has certainly created a positive market sentiment, given the special thrust on revival of growth, demand creation, and investment. Now, leave aside the fundamental metrics that we use to gauge for the investment decision, like P and whatnot. Since budget day, just look at this: the Nifty has rallied more than 11% on the back of this positive sentiment, while being supported by the buoyancy in global equities. Even S&P has also gone up by 5.4% up post budget. Now, the investment strategy after this budget and in the new fiscal, I think there are three factors that I would like to mention here. Number one is the earnings recovery. Number two is the mid cap and the small caps will outperform, and the revival of the private capex cycle. Now, these three factors are very important, right, for the new fiscal. And if you really look at these, right, the union budget is also further reinforced, this conviction in these 3 points. look at the, I would say the, the constructive outlook for the equities in the medium term, given the expected rebound in earnings and the impetus provided by this budget, and a benign outlook for global equities as well, right? And the abundance of liquidity that is available domestically, as well as, the liquidity flowing from the overseas into India, right? Among the emerging markets post this particular budget, if the dollar is going to remain strong, the emerging market would benefit, in terms of additional inflows, and the India would be the largest beneficiary. Yes, Dr. Ranade also said, okay, the international confidence and trust in the performance of the Indian economy, right? Because despite these current account deficits and large balance of payment reserves, that the fourth largest that we have, it suggests what? It recognizes that the buoyancy, right, and the trustworthiness for creation of wealth by the Indian economy. Now, this is where, if you really look at the performance of the stock markets, I personally feel that what the leave aside for the time being, I don't say, but if you keep on your mind only on this kind of fundamental metrics for arriving at a decision, you might miss a bus in the new fiscal. It should be the combination of either a lump sum investment, right? A lump sum investment, a staggered investment, or a buy on every dip. Have a judicious mix of these three particular things, and you will definitely make money in stock markets this year.
Great, sir. Great, sir. That you will definitely make money in stock market, and it's a multi-year wealth creation cycle. So, even if there's a short-term correction, don't worry about it, I think. And it's also good part about it, this cycle is likely to be more diversified, more broad-based than actually focusing in particular sector. I think we are just about to get close to, and before that, I'll probably just get a brief question from Niranjan Bhai. Sir, I think, is there, right now, government, you're seeing a huge amount of buoyancy from the government side, push towards by the government on making many things happen, coordination between RBI, do you see any risk of what can go wrong? What are the things you would worry about in terms of, in the current environment as things are progressing? Sir, you're on mute.
As a businessman, we are quite used to the volatility that comes into the marketplace. In the last couple of years, a huge amount of volatility does exist as far as the Indian scenario is concerned. But when you have a growth story, which is proactive, and a positive infrastructure story, a positive story in terms of private sector investment, a good direction in which inflows of capital are going to come, I think the overall buoyancy lifts the entire market. That is important. Now, obviously, there will be segmentation, which requires consolidation. There are certain sectors which are going to grow faster. Technology uplifts have taken new businesses to come into the whole thing. We are also diversifying into new real businesses. All these are great opportunities. But you have to understand that there are going to be many, many pitfalls. Look at the farmer story. Now, we all know that the change as far as the policy was concerned was very correct. But politically, this is the first time that the Modi government has not been able to successfully stymie a negativism which has happened. Now, is it going to continue when you do new things like privatization, selling off the government's public sector banks? Are they going to have any such reaction in terms of the marketplace or the overall environment, which will actually delay these projects? That could be a risk factor. Similarly, they're talking about selling Air India for the last 5 years. They haven't been able to do it successfully. We do hope that it is there. I met Mr. Hardeep Puri. There seems to be a positive story in this matter, but there is a risk profile on it. The issue in these last 3 years in real estate business, so many pitfalls took place. The 70% escrowing under RERA for real estate businesses required that you need 3x funding for the same project. So if I required 50 crores of rupees of investment, maybe 5 years ago on a project, I need 150 crores of rupees on the same project or similar project today. So obviously the requirements of fund and the ability for people to do it will change. So you can't rest on what you did yesterday and say, I'm going to continue to be successful. Are you capable of weathering the change? And I say weathering when you are in the same business, or be able to take challenges into a new business and leap into the dark of the new world, which is really growing so beautifully. And opportunities are coming our way. Or somebody will take it away from you who is more farsighted and willing to take that risk of capital or investments into the new project. So when you say, Vikas, that whether there is going to be a risk into the future, a growing sector of economy may lift most of the people out of the situation. But there will be a lot of companies which will disappear and denigrate and do it, and especially what Mr. Ranade said about those companies which require to benchmark themselves internationally, the change is far more faster. So let's presume I set up a factory 50 years ago or 60 years ago. I wouldn't have to worry for 25 years whether I'd be successful or not. It would be successful. Today, after I've done the investment, I have to worry that within 5 years, is my production capability going to be obsolete? Is there new technology going to be there? Are there going to be new ways to market it? All these changes have to be now guesstimated and do it. And you could go wrong or right. So hurdles, plenty. Growth story, positive. Making money, lots of more people will make lots of more money. And I think the quality of life of an average Indian will grow. Will it grow fast enough for the aspirations of the Indian people? That is my question. So you may have a growth of the GDP. Is it percolated to the 200 million to be turned to 500 million, which Mr. Ranade talked about? And that is a very big challenge that we are facing. The change which has now been done in this budget is seeking to move that direction. So I do hope that we succeed in this whole new novel things that we are doing. It's a very, very good story, very ambitious story. And I'm hats off to the government for having actually trying it. Hurdles, you saw the farmers. I anticipate more coming.
Great. I think what a way to sort of end a conversation like this. I think, you even summarize, very, very well that, opportunities are going to be galore. India is embarking on a, or leapfrogging into a new orbit. And this budget obviously sets all of us on that journey. I think the sentiment across the panelists was very clear that it's a growth-oriented budget. It's a budget which is seeking more private sector role. It is a budget which is enabling the 200 million into middle class and upward lifting of a wider population of India. And I think it's a budget of aspiration. And I think we could not have asked more. And in fact, somebody said that COVID in some sense has been a good catalyst or a positive thing for that. Even I think from a crisis management perspective, India has done a great job, but economically it has put India onto a very, very different orbit and trajectory. With that, I would like to hand over the panel back to Suhasji for your closing remarks and closing ceremony, sir. Thank you.
Thank you, Mr. Hiranandani. Thank you, Mr. Merchant. And thank you, Mr. Vikas, for an excellent and enriching panel discussion and sharing wholeheartedly with our members on economic and the 360-degree view of the budget 2021. May I request Kinjal Shah to propose very well deserved vote of thanks. Kinjal, please. Thank you.
Thank you, President sir. We indeed had a wonderful session on a 360-degree view of the Indian economy. And the panelists summarized it initially, shared their thoughts on how the budget affected the Indian economy and the general population, the population at large, along with the businesses. And I am glad that Hiranandani ji did not share with the finance minister his views on tax. Otherwise, we would have been burdened with the higher tax. On a lighter note, that was really glad to know. the other panelists also shared how the bold changes have been effected. Mr. Anand, they also shared his thoughts on how deficit financing is good for overall development of the economy. And one of the important aspects after the budget and during the budget has been that the government has been actively seeking private participation and has been trying to communicate that private sector participation is not a stigma, but the country could develop only if there is participation from the entire gamut of business organizations, including the private sector. And we all hope that the growth would be accompanied or supplemented by a stable interest rate regime, which is one of the major concern considering the stimulus being given. Infra and agri development has been at the forefront of this the budget and the finance minister's speech and even thereafter. So I mean, in a nutshell, I would say that at the beginning of the year, I mean the financial year, the Indian economy was one of the worst hit, including the global economy after the 1945, the World War ended. And we never know, I mean, whether it's a V-shaped or it's going to be a W-shaped recovery. But we all are sure, and with the inputs of all our panelists, we are doubly sure that our Indian economy is on a strong footing to leap forward with an estimated GDP growth rate of 11%. And what is more important, as Mr. Hiranandani also said, that how do we ensure that the growth, I mean, is the participation of growth is wide based and the entire population, I mean, all the citizens enjoy the fruits of this growth equally is more important for the government, whichever government has, I mean, actively trying upon. So just to summarize what has been the inputs from all our panelists is that the budget has tried to give relief, especially the MSME and the employment sector, the recovery through higher fiscal stimulus, reforms is on the forefront of this government with minimum governance, maximum governance and minimum government. And we hope that with all this, we enter into an Atmanirbhar Bharat where all the Indian citizens have Atma Samman of being part of this growth story. And I, on behalf of Bombay Chartered Accountants Society, am thankful to Mr. Hiranandani ji, Mr. Bhagirat Merchant, Mr. Anande for joining this panel discussion, and Mr. Vikas Khemani for moderating this discussion and making this a very interactive session. I thank all the participants and the moderators on behalf of Bombay Chartered Accountants Society, and we look forward to have you at some other sessions on a more wider platform for larger participations by our member. Thank you, friends.
Thank you.
Thank you very much. Thank you very much.
Thank you.